Hey everyone, Letitia here, coming to you this Thursday afternoon with another edition of my weekly Money Matters webinar series. And as announced a bit earlier today, today's topic is protect yourself and your wealth with critical illness insurance. Now, as you know, as some of you may know, I'm actually licensed in this area. So I will be the guest on this week's webinar. Because I am licensed in this area and I do understand the topic of discussion. And so as my little introduction video stated and my little, and by the way, I apologize for the noises. I am at a cafe. I didn't have stable Wi-Fi where I'm staying. I'm traveling at the moment. So I'm taking advantage of some Wi-Fi connection here, okay? So I apologize for any noises. Anyway, thanks everyone for joining. And again, as an intro to today's topic, I'd like to say, have you ever thought about what would be the biggest risk to your financial well-being? Other than, a lot of time in today's times, a lot of people would probably say, well, the government measures are clearly the biggest risk. And, I wouldn't disagree with that because we are living in some unprecedented times and where unfortunately a lot of government measures have had a drastic impact on people's livelihoods. And in addition to that, you may probably think, well, okay, if things were not the way they are right now, what would be another big risk? And a lot of people tend to say things like, well, something like a house fire or a car accident, something like that would definitely be a major risk. And that's absolutely correct. Now, as you'll see in today's presentation, those risks are actually very statistically improbable. On the other hand, there is a major risk out there that a lot of people, as we go through life, we don't tend to think about it unless something happens either to ourselves or to one of our loved ones. And that is the risk of being diagnosed in our lifetime with a major illness, according to the Canadian Cancer Society, and not to say anything about it, but they are the official speaking piece the official organization that keeps statistics on cancer in Canada, right? So according to them, Canadians have a 1 in 2 risk of being diagnosed with cancer in their lifetime. And I'm sure, and you can ask yourself, do you know anybody close to you or any friends or family that have actually been affected with this, with cancer or any other major health condition, such as, God forbid, a heart attack or a stroke or things like multiple sclerosis. Unfortunately, as we go through life, we're not made of steel. I know many of you, my amazing friends, are very health conscious, and I consider myself a pretty health conscious person. That being said, not everything is under our control, and unfortunately the statistics are as they are. And I've had the unfortunate experience as having a number of members of my family being affected with cancer, and even somebody, one of my close friends. So when we're talking about a 1 in 2 risk of something, you got to wonder, is it worth insuring for a risk that has a 1 in 2 chances of happening? And that's just cancer alone. If we look at other health conditions that somebody might be affected by, the risk goes up even more. And so in today's presentation, I'm going to talk about something called critical illness insurance. Now, some of you may be familiar with this financial product. Some of you may have heard of it. I apologize again about the noise. You may not know exactly how it works. So I'd like to take, I'm hoping it's going to be a quick one, maybe 20, 25 minutes today, to make you familiar with this type of financial product in case you yourself would like to put something in place to offset some of this risk that exists out there, okay? Out there, in here, however you want to look at it. So I have a few slides that I prepared now. I briefly covered this material in the first presentation that I did called Introduction to Financial Planning. That presentation, I never went live on Facebook. It's still available on my Maven Wealth YouTube channel, but you'll have to dig back. And in any case, I'd like to give critical illness insurance kind of like proper coverage in today's presentation, okay? So give me 1 second, I will share some slides with you, okay? And by the way, everyone, as usual, when I'm sharing slides, I'm not able to see any comments on Facebook. But if you have any questions or comments, please don't be shy. Put them in the comment section, and I'll be happy to address them. Okay? Thank you. At the end, once I'm done with my presentation. Okay? Thanks, everyone. So, okay. So I'm just gonna go in presentation mode. Okay. Okay. So let's first talk about why was critical illness insurance invented. In fact, you know, these are some things we're gonna cover. What is the need? I've already addressed some of the need out there. Does it make sense in your plan, and what type of product would make sense? So back in 1983, there was a famous heart surgeon, and in fact, Dr. Barnard, a South African heart surgeon, was the first person to perform the first successful open heart surgery. Now, don't even ask me what that is. It sounds scary, okay? Bottom line, he was a reputable surgeon, the first one to perform an open heart surgery. And what he realized was that things that in the past would have meant certain death, perhaps a heart attack or a stroke, or even different forms of cancer. In the past, people, there was no return from those types of diagnoses. It would have meant certain death. With advances in medicine, with faster access to care, physicians, and we can also talk about alternative treatments and so on. But now people had a higher chance of surviving these things that in the past would have meant certain death. However, survival came at a cost. So as Dr. Barnard realized, it's amazing that now we can save people's lives and prolong life. But what he realized was that there was an impact on that person's lifestyle. Right after open heart surgery or after a heart attack, most people are not able to go back to work the next day. Most people probably require some amount of recovery period. And as we learned, the average recovery period after a major health condition is 2 years. So whether it's cancer, heart attack, to the extent that a person will survive, the average recovery period is 2 years. Now, in case you're wondering about some of the survival rates, because I don't think they're covered in the presentation, but just so you have an idea, right now, as of now, first-time heart attack victims, 85% of first-time heart attack victims survive the first attack. 90% of first-time stroke victims survive the first attack, which is amazing news. Again, thanks to faster access to care, faster ambulance service, better procedures, people are surviving these things more so than in the past. However, again, we all know people that, well, not necessarily, but at least we've all heard of people that have had a stroke and then there was an impact in their quality of life, right? And again, in their ability to even be able to work following the incident, the event. So, as you can see, well, this is funny how this is worded. In other words, people were not, so what Dr. Barnard realized is like these people are not using, in the insurance industry, we have something called life insurance, so that if somebody passes away unexpectedly or passes away for whatever reason, their families would get a sum of money to look after themselves or look after taxes or whatever the family's needs may be. So what this doctor realized is like, well, these people are not, these people are surviving. They're not using their life insurance policies, but there's definitely an impact in their health. So what can we do to actually, so as you can see, the bad news, their lives were still impacted financially, emotionally, and there was no relief available from the insurance industry. So what Dr. Barnard figured, there should be a product out there that covers these major health conditions, and don't give people a hard time about, oh, you have to prove to me that you've incurred these expenses, or you have to show me how financially impacted you were. We know there's a financial impact. And unfortunately, I've had experience in my own family. My own mother is a cancer survivor, in her first year of recovery, my parents were still new immigrants to Canada at the time. They didn't have a time to build a nest egg. And by the way, we're going to talk about that as well. What happens when you have a nest egg, but all of a sudden you're faced with a critical care condition. So, you know, in my mom's, and thank goodness my mom survived. You know, it was about a 2-year recovery period. Now, my mom was fortunate enough to have a benefit package from her employer, which included disability insurance. Disability insurance, which we could address in a future webinar, is something that provides you with a monthly income amount equivalent to 67% usually of your pre-disability earnings. So my mom had some income coming in, but even so, my parents went into debt about $25,000, paying for things that were not covered by OHIP. And again, we're going to talk about that. Many people want to give themselves access to care beyond what OHIP or beyond what government healthcare may cover. I know people say, well, we live in Canada, we have free healthcare. First of all, as any of you who have done any research will find out, that's a big misnomer. You know, 50% of our tax dollars go to cover our free healthcare, okay? And unfortunately, as a good friend of mine found out, when it came to the actual care that was offered, it's a take it or leave it scenario. So when it comes to, so I'll tell you what's covered. Chemotherapy and radiation inside a hospital are covered. Now, unfortunately, as a patient in Canada, you don't get to decide which chemotherapy drugs you want to put in. You don't have any say as to the dosages that are being used. And again, I'm not a doctor, but I can tell you from a friend's experience that there are tests available that will actually test these particular chemotherapy drugs, a number of them, against your particular type of condition, okay? And as my friend found out, of the 8 drugs that the local doctors wanted to give her, only 2 of them were actually effective for her actual condition. And when she asked, hey, I don't want all 8 drugs, and I don't want them in these large dosages. I just want the minimum amount, and I only want these 2. Sorry, tough luck. We can't do that. So Ontario hospitals, and she's gone to more than one, in trying to get the care that she wanted to get. It's her body after all, and she's the one facing a life-threatening condition. She was told, I'm sorry, that's not possible. Liability issues, no, this is the standard procedure. Oh my gosh, sorry guys. And essentially it was take it or leave it. Now, my friend, thankfully for her, had the means to go to a clinic in Mexico. Oh my gosh, guys. Mucho ruido. Oh my God. Okay. There's nothing I can do. They're doing their work. Okay. So yeah, my friend had the means to go to a clinic in Mexico where she could get only those particular chemo drugs that were actually proven to actually show results for her particular condition. In addition to that, over there, she was able to access a number of naturopathic treatments, which I don't even know the names of, but she was at some point on 8 hours type of treatments per day, okay, at a cost of 7,000 Canadian dollars per week. Now, ask yourself, I mean, when given a choice, if you had the means, would you rather access these other options that exist out there, or would you rather be in a situation where, take it or leave it, this is all we have to offer, this is the standard of care? When I asked myself that question, I realized I'd rather have choice. I'd rather have choice when it comes to my body, when it comes to my healthcare. And again, especially those of us who are proactive about our health and we do the best we can to take care of ourselves. Should we ever be in that sort of situation, I know for sure I would rather have choice. Now the question is, should you ever be in that sort of situation, do you have the means to be able to access that? And unfortunately, not everybody does. However, this is where something like critical illness insurance can come in and be very helpful. So anyway, getting back to my slides, what this doctor said, well, okay, we should make it easy for people to apply. They shouldn't have to show proof of hardship, because we know there is hardship following a major health condition, okay? There's gonna be some level of emotional and economic hardship, because if a person has to stop working, even if you are fortunate enough to have disability insurance is good enough to cover the bills. However, any medical procedure that is not covered by OPIP, even things like cab rides or Uber rides to the hospital. My mother, when she was recovering from cancer, was too weak to be taking the TTC from where she lived, and she didn't drive. Anybody she did drive, she would have been too weak to drive. So she had to take cab rides to the hospital. All these things unfortunately add up, okay? So again, what this doctor said, the money should be available as soon as possible. So there should be no longer than a 30-day waiting period. In other words, between the time you get diagnosed to the time you actually get the money, you shouldn't have to wait like 6 months to get the money. So this is how the products were designed. And again, the products have now been in the market space for about 15 years, I would say. Not that long, but they were a welcome addition to the insurance market space. And I'm sure you can agree that when you're facing a 1 in 2 risk, this is something that it's worth insuring for. At least I think it is. You're free to think as you wish, okay? So once again, as we discussed, not everything is covered by OPIP. People have this great illusion that we have free healthcare. We've already discussed that it's not free, okay? A lot of our tax dollars go to healthcare. But the issue that is most concerning to me is that when push comes to shove, like when it comes to the actual care that's available, those of us, especially those of us who are into what you could call what's become known as alternative health, it should never be alternative health. It's ideally holistic health. We are not left with many options in terms of hospital care. And again, I don't want to get too far into the history of modern medicine, but some of you will have done your research and you understand why what we call medical care is the way it is right now, as opposed to being more holistic in its scope. Bottom line, there are holistic options available, but they come at a cost out of pocket for you as a patient or for the affected person. So, you know, in my friend's case, surgery was required. She found out in Canada she could only have knife surgery. Well, that, unfortunately, while it works in some cases, unfortunately, it also has the greater risk of spreading the illness to surrounding tissues and so on. My friend, again, because thankfully she had the means and with the support of some of you, by the way, she was able to get laser type surgery, which was only available at one hospital in New York, okay? So people who have the means are able to access superior healthcare. Those who don't are left with take it or leave it, or don't do anything. And then, I mean, you know, there are very difficult choices to be confronted when somebody is facing a major illness diagnosis. And again, if, you know, when given a choice, I would rather have some funds available that I could use to give myself access to the kind of care that I want. And I think many of you would probably feel the same way. So once again, what this product provides, it provides a tax-free lump sum of money. So that lump sum could be anywhere from $50,000 to $100,000 to $150,000. They go all the way up to $2.5 million. I believe that's as high as they go up. Until a few years ago, the limit was $2 million. Now you may say, well, do I really need this amount of money? Well, it depends who you are. Now, if you're the owner of a corporation and you're the key person in that corporation, and you may have employees, and you may have payments to be made, corporate loans or what have you. These policies can actually be owned by a corporation. So instead of you as the individual receiving the money in the case of a major health event, your corporation could receive the money. Some of that money could be used. Now, if it is received by a corporation, it's not tax-free. The money enters the corporate account on a tax-free basis, but then it will be, you know, to the extent that you want to use some of that money personally, you'd have to, the corporation would have to declare a dividend payment, so then there is tax on the dividends. But you could make up for that by purchasing a higher amount to still get the desired amount of coverage. And again, the benefit of having it owned through a corporation, and again, this is a bit of a side note, is that that money could then be used to keep the corporation afloat while you as the owner or you as the key person is focusing on recovering your health, because there may be, again, corporate loans, other financial obligations of the corporations that the corporation that need to be taken care of, while you are also taking care of yourself and focusing, doing your best to recover your health. So again, what this plan provides for, whether it's individually owned or corporately owned, it allows the insured person to focus on their recovery. Somebody could say, well, they could take a holiday. You know, I don't think that's, you know, I think recovery is the number one thing that somebody would have. Everybody wants to get back to health, you know, whenever they're facing this sort of situation. And again, it's so interesting, I like to say, because those of us who are healthy, it's easy to take your health for granted when you're healthy, you know. And I actually had a conversation with my friend who is currently still dealing with the consequences of the diagnosis. And I was complaining to her about the stress I had, that I was moving and all this. And she's like, honey, I understand. Just be grateful you're not facing the kind of situation I'm in. Because when your health is on the line, nothing else matters, honestly. Like, everything else becomes much less of a priority. Now, that being said, when your health is on the line, if you still have to worry about paying bills and you're too weak to work or working would add additional stress that could potentially even make your health situation worse, that's not a situation I desire on anyone, which is why I am a believer in this product. I've had too many people in my own life being affected that could have benefited from this plan. And thankfully, I've also heard, none of my own clients, thank God my own clients are healthy, and I hope they stay healthy their entire lifetime, you know. But I've heard enough stories, and I have also heard of people, clients of advisor friends of mine who have been able to make successful claims on this type of plan and have used the money for the kind of care that they wanted to have access to. So, how would you use the funds if you're ever diagnosed? Well, I'm sure you can think of some of the choices that you'd want to give yourself access to. Medical tourism is becoming a thing. And again, I think there are legitimate reasons for that. So for example, my friend, the kind of care that my friend received in Mexico is not available in Canada or the US. And it's not available because, as some of you understand, there is only a certain kind of medicine that is allowed in our Western countries for reasons that date back to early 19th century or early 20th century. And again, I don't want to get into that, but you can do your own research on Rockefeller medicine, okay? That being said, thank goodness there are countries in the world, few and far between, where you can still access more holistic type of care. And even in Canada, there are certain holistic treatments that can be accessed, all at an out-of-pocket cost, okay? Now, in terms of what this sort of policies cover, the big ones, I would say about 70% of claims are, or even as high as 85% of claims are due to these conditions on the left: heart attack, cancer, stroke, bypass surgery. The policies cover up to 25, some even 26 different conditions. You're going to recognize things like Parkinson's, Alzheimer's, MS, benign brain tumor. Unfortunately, we see more and more of those types of issues, even in younger people. Cell phone use. Well, again, not a doctor, but I know that can be, cell phone use has been used to that, has been linked to that. So watch what you're doing. Another clause of these policies is something called loss of independent existence. Now, unfortunately, I had the experience of having, when I was an advisor with Sun Life, I had a client that I had inherited. And at the time, critical illness policies did not cover this clause, which is loss of independent existence. So unfortunately, the man had worked as a roofer, and unfortunately for him, he fell off the roof and became bedridden. He didn't die. He was a young father, had 2 young children. His wife became his full-time caregiver. Very unfortunate situation. Thankfully, because he was working with a union, he had proper coverage. He was covered by WSIB. Thankfully, I think that's the only coverage he was receiving. So it was still better than nothing, which is a government insurance plan available for people who work in the trades and higher risk occupations. At the time, plans did not include what we call loss of independent existence. And unfortunately, he did not meet the criteria. He wasn't considered paralyzed, so he didn't meet the criteria for paralysis. He wasn't considered in a coma. He became, unfortunately, mentally like a vegetable. Like he was just not, I know it sounds horrible to say that. He was in a complete dependency state, but did not meet any of the definitions. So I think because of cases like that, because anybody would argue, okay, he may not meet the definition, but he's clearly in a dependent state. He clearly cannot work anymore. It was just such a sad situation. So now plans do include something called loss of independent existence. So if somebody has suffered a loss of their critical faculties, so things, and there are 6 different conditions, things like bathing oneself, toileting, dressing oneself, feeding oneself. Those are what we call the activities of daily living. There are 6 activities of daily living. If 2 of those activities have been affected and the person requires either hands-on or hands-off like assistance or supervision, the definition of the LOIE condition will be met, and then that person will be able to make a claim, okay? So it's something good to know that policies have become more inclusive now, and even if it's not one of those specific conditions, but if it's something that is a loss of independence, that person will be able to be covered. Yeah, we don't have a lot of foreclosures in Canada foreclosures or what we call in Canada power of sale. However, the #1 cause of a property going into power of sale is disability due to a critical illness. So disability due to a critical illness. So as you can see, a lot of people have life insurance, not enough and not in a sufficient amount based on what I've seen in the marketplace. But a lot fewer people are actually insured for a much greater risk, which is that of being diagnosed with a major health condition. Absolutely. So the possibility of surviving, so being diagnosed and surviving with critical illness is almost twice as great as that of passing away prematurely. So again, we spoke earlier about what would have the biggest financial impact on somebody's life, financial, emotion, and other things. These are some of the risks people think of. Which of these would have the biggest impact on your life? I think it's pretty easy to see that the last one would probably be the most impactful. So again, in terms of the statistics, the risk of developing a critical illness at any point before age 75, and as you can see, the risk as somebody is younger is higher because you have more years of life ahead of you for that to occur, for that condition to occur. As you can see, depending on somebody's age, you have, for men, an above 60% risk in some of the age ranges of developing a critical illness. We spoke about cancer alone being 1 in 2. Add to these things like heart attacks, strokes, multiple sclerosis, you name it. Some of these other health conditions, I think we can understand. And again, the risk of death at any, so the risk in males seems to be a bit higher. Based on the premiums I've seen, there's not a huge amount of difference, okay, between men and women. Whereas for things like life insurance, women tend to pay a lot less than men. Again, we're just talking about statistics. Yeah, these were just some famous people that were affected. We all knew about Sheryl Crow. Nobody would have thought these people would have gotten diagnosed. I mean, someone like Sheryl Crow, she seemed like a picture of health. But the healthier somebody is, it also stands that they are more likely to actually survive the condition because their body is stronger. They can fight it off, obviously. So again, we already spoke about, yes, you're likely to survive. However, what about all these things that continue to occur? So there are recovery expenses. Your day-to-day expenses don't stop, even though you or whoever is affected by this may have to stop working temporarily. Their expenses don't stop coming in. So now, I know there are those of you, by the way, a number of you in my audience are successful real estate investors. So you have a good level of passive income coming in. Now, I should have a presentation about critical illness insurance specifically for real estate investors, because my concern with real estate investors is that while you have some level of cash flow coming in, some of you more than others, which can support your lifestyle expenses, I have to wonder, and in my experience, a lot of real estate investors are property rich, cash poor. Now, some of you, like the cash flow queen that I interviewed on our last webinar, obviously there are some strategies that are high cash flow real estate investing strategies. Not everybody, but a number of investors are in that space. Most investors that I know are what we call buy and hold investors, where there's a certain amount of cash flow coming in, but it's not enough to replace your lifestyle expenses, or even if your cash flow does replace your lifestyle expenses, there's still not anything being added on at that time when you need it the most. And of course, there are other things you may consider doing. Well, maybe I'll refinance one of my properties and get access to cash that way, or maybe I'll sell one of my properties. We're gonna get into that in a second. So yes, you could, in other words, you could self-insure for the risk. But as investors, you know that your own money is always the most expensive money that you have access to. If you can offset the risk, and especially we're talking about wanting to risk, if you can offset that risk to an insurance company while protecting your own assets and your own capital, which would you rather have? Okay. Okay. Of course, some valid questions here. Okay, they're not easy questions to digest. Would cash have helped? Yeah. So, this is a question that you can ask yourself, what would you really want in an ideal world if you're ever facing this sort of diagnosis? In terms of the amount recommended for care, as I explained earlier, the average recovery period for a major health condition is 2 years. So if somebody's going to recover, we see the average recovery period being 2 years. So the general recommendation, in terms of if you're wondering what amount of coverage would be sufficient for me, if you earn 50K a year, ideally you'd want to have about 100K. If you can afford to get more than that, amazing. Any amount of coverage is better than none. Like I told you in my mom's case, again, and my mom didn't go crazy. I mean, my mom did take advantage of the traditional healthcare provided by the hospital. And at the same time, she did supplement that with some alternative care. And even so, again, we're talking about, $25,000 worth of expenses in the first year. And I can tell you again, my mom did not exclusively use alternative care. If you're going to be exclusively using alternative care, the expenses can add up really quickly, as my good friend has seen. And again, in terms of how the product is structured, you can have what we call permanent coverage, where you lock into a premium based on your age and your health right now. And that premium remains, I'm actually going to go back one slide. That premium remains the same for the duration of the policy. Some policies will go all the way to age 100. Some policies will end at age 75, okay? But the premium becomes locked in based on the age at which you acquire the policy. And now, in most cases, the policies that end at age 75, I mean, while coverage to age 100 is available, sometimes you really have to wonder whether it's worth the extra cost. What we see is that the older somebody is, so people getting to retirement age and really those later stages in life, typically what we're seeing are more chronic health conditions, so more long-term care time concerns. So whereas somebody who's in their prime working years, if they were facing a diagnosis of a major illness, there's an immediate and critical impact. With somebody at a later stage in life, oftentimes it could turn into a long-term care situation. So we actually have something called long-term care insurance in the marketplace that is meant to provide care for a more chronic long-term solution. Now, of course, you can still acquire critical illness all the way to age 100, but in many cases, people say, well, you know what, as long as I protect myself during my prime working years and maybe early retirement years when I'm more active, that's good enough for me, okay? Now, on the other end of the spectrum, so these are the permanent type products where the premium gets locked in. Now, of course, because you're locking in for a longer period, so you could be 35 years old, but you're acquiring a product that's going to cover you all the way to age 75. That premium is now going to cover, you know, the next few decades of your life, when your chances of developing an illness, and the older we get, technically, the higher the cumulative risk of something happening, right? So that's one way of putting a policy in place. On the other hand, we have what we call term policies. With a term policy, your premium is only locked in for the first 10 years or 20 years of the plan. And then after that, it would jump up to a predetermined amount. Now, if you still choose to keep the policy in force after the renewal period, again, the premium can be guaranteed. Now, if you're in good enough health and you're willing to go through underwriting again, which may involve, you know, you submitting to some blood work and answering a number of medical questions, as long as your health is good enough, you may be able to get, you likely will be able to get a lower premium than the automatic renewal premium on these term policies. So the option of starting with a term policy is oftentimes very, well, it's a lot more affordable than the permanent plans. It gives you immediate protection. You could get, you know, literally as soon as you're approved, you now give yourself access to $100,000 or $200,000, whatever amount of coverage you want to give yourself access to. Now, the beautiful thing about the term policies is that if later on you don't want to be facing this ever increasing premium, you can choose to, Anthony, with no medical questions asked, convert your term policy to something of a permanent nature. So you could convert from the term amount, it's called temporary option, also known as term insurance, to the permanent one, again, with no medical questions asked, which is really great because while your health may be great today, again, 10, 15, 20 years from now, we don't know what kind of health conditions may have developed. And one other thing about this plan, guys, is that while your own health may be good, insurance companies will also look at family history. So unfortunately, if one or more of your family members have had a critical illness typically before age 60, and we're talking about the immediate family, mother, father, brothers, sisters, that will likely have an impact in your premiums. Unfortunately, they do consider genetic factors. And again, some of you may be like, oh, but my father, he was a heavy smoker and he ate everything. I understand. And whereas you're a picture of health, the insurance companies still consider that if one of your immediate family members had a major health condition, especially for cancer, you know, I myself, when it comes to my critical illness insurance premiums, I'm paying higher than the average person because of my mother's family history. It is what it is. Again, if it was something minor, there can be some flexibility there, but more often than not, you will see some reflection in your premiums. So sometimes your own health may be great, and you may feel like, well, you know what, I can wait a bit longer to put something like this in place. I don't want to take this on right now. Okay. Unfortunately, if something happens, you know, you have full, you know, you may feel like I'm being proactive about my health. Nothing's going to happen to my health. Okay. Again, unfortunately, we all know there are certain things in our environment that are in the process of being rolled out that could have very serious effects on our health. I'm just saying. And unfortunately, we don't have full control over everything as much as we may want to. But again, you may say, I'm a very health conscious person. Nothing's going to happen to, I don't think anything's going to happen to me. Are your immediate family members equally health conscious? So later on, you may choose to put something, you may want to put something in place. Unfortunately, I've seen people who, because they've had two or more, so if you've had two or more family members, immediate family members who have had a serious health condition, that actually precludes you from getting critical illness insurance. It's one of the, critical illness insurance is one of the hardest products to even qualify for, partly